80% of trading losses can be prevented if you become more aware of your emotions. If you don't separate yourself from your emotions when you trade, your emotions will separate you from your goals. Emotional control separates the unsuccessful traders from the successful traders. Now, emotions are not the problem here. Emotions are not necessarily evil. They are signals to use and learn from. So treat emotions as signals and get curious about what they are trying to tell you. Become a detective and get excited to get up clues and get curious to understand what they mean. A lot of traders still think that you need to control your emotions to be a good trader. That is just not true. What you should do instead is to develop the ability to first recognize your emotions and then understand them. You need to understand your emotions so that you know what you are actually dealing with, and you can actually develop a plan to deal with these emotions when they arise. Emotions are not necessarily negative. In trading, there is no good or bad emotions. There is just emotions. If you use emotions correctly, emotions can actually fuel your performance. Just like how Michael Jordan went on to become the best NBA player, the greatest of all time. Someone talk shit about him? Michael Jordan knew how to read into his anger and channel it into his performance. It's a skill that most of us can learn how to cultivate. So a few years ago, I was having family dinner with my aunt, who is like the most evil woman in the world. And she told me that I can never make it in life. And then she told me that I will never amount to anything, just like my father. I took that personally and I went out there to become the best version of myself. Whenever I feel like giving up, I think about all those people who doubted me, all those people who didn't believe in me, and I wanted to succeed so bad to prove them all wrong, and eventually I did. So use your anger as fuel and work harder. Work in silence and let your success make the noise. Don't treat them with kindness, torture them with success. Now, back when I was still a broke 17-year-old college student, there was this one time where I managed to grow my small $500 account into $10,000. Instead of withdrawing my profits, I got greedy and I wanted to turn that $10,000 to $50,000. So just to see like how far I can get. So the next day, I knew that non-farm payroll was gonna come out at around 8:30 PM Singapore time. So I waited for that and I just told myself that why not just try your luck and trade it for some quick profits. That is called gambling, not trading. At 8:30 PM when the non-farm payroll news came out, price started collapsing, so I immediately entered for a sell with a 3 standard lot size. At that point of time, my heart was pumping so fast because I was literally risking my entire account on that one trade. It was all in or nothing. And then price started reversing against me and it went all the way back up by 100 pips. At that point of time, I got margin caught and I blew my account, and my account literally went into like negative. When I saw that, I froze. I didn't know what to do. I was so devastated that I started crying on my bed and I started punching my pillow. I regret taking that trade so much. I wish I could turn back time to stop myself from taking that one trade and just withdraw my profits. Now I'm back to square one. I'm back to $0. The worst part was that I had just told my parents that I made a few $1,000s from trading and I can potentially do this full time. Now what should I tell them? I never told them the loss. The next day, I asked my dad for $1,000 so that I can pay my school fees, which was a lie, and I immediately deposited half of that into my small account. So now my small account have another $500 to trade with. I wanted to get back the $10,000 that I lost so bad, so I started revenge trading. I forced trades even though there's no clear confluences, there's no clear opportunities in the market. Bad trades lead to losses, and I ended up blowing that account as well. Now bear in mind that at the point of time, my dad was already 60-year-old and he's still working hard as hell as a real estate agent to put food on the table. So do you know how embarrassing it was when my dad asked me where the money went? So I did this for a few times. I'll deposit money and blow the account until one day I was so sick of losing money. So that one day I decided to get my shit together and started learning how to become a professional trader who does not trade based on his emotions. So that was when I first started learning about trading psychology and the mental game of trading, which is exactly why I'm making this video, to remind my past self, or rather remind you guys, that technical analysis is not all there is to trading. You need proper mindset. You need to defeat the mental game of trading, which is the hardest. The biggest mistake that you can make as a trader is to be attached to your trades. You are attached to how you want things to be rather than acknowledging what they are. If you are attached to your losses and wins, your whole trading journey will be hell. For example, let's say you enter for a buy here and you start seeing the trade go against you and price starts falling heavily because of sellers' liquidity. Instead of being flexible and pivoting your position to enter for a sell instead, you continue to marry your trade. You continue to sit there, pray to God that eventually the market will reverse and go back up so that you can eventually get into profit. But no, the market goes down even further and further, and eventually you ended up getting out with a big loss because you can't take it anymore. In reality, the market was neither good or bad because it's doing exactly what it does: go up or go down. Which is why you need to accept these three harsh truth about trading. The market is always right. The market does not care about you. The market is not a human, but an irrational, uncontrollable entity. To trade well, you need peace of mind. To get peace of mind, you must learn detachment. Once again, emotional control is not the solution. Emotional resolution is. Develop the ability to stand aside and observe not just the market action, but also your thinking. Watch the market with a mind of interest and curiosity, not one of judgment and labeling. Give your mind the time and space it needs to open and reflect. So from now on, I want you to monitor your emotions before, during, and after you trade. This will allow you to know yourself better as a trader so you know what to work on. So here's my 3-step system to reach emotional resolution. The first step is to map your pattern. To have a clear understanding of what you will encounter on a daily basis, you should identify an overall macro view of your emotional volatility. You also need to get a clear understanding of what these emotional reactions look like on a micro level so that you can quickly spot them and minimize the damage when you are live trading. Start looking closely at the specific emotions, thoughts, decisions, and actions that are automatically triggered when you are trading. They are the data that will help you understand the entire problem. For example, let's say you're scrolling through Twitter today and you start seeing some traders saying that this crypto coin is up 20%. Immediately, you feel a sense of missing out. You don't want to miss out on this once in a lifetime opportunity. In this case, it might look like FOMO on a surface level, on a macro level. But if you dive deep, FOMO can actually mean more than one thing. It can be a sense of greed, because you think that if you miss out on this opportunity, you won't be able to find other good money-making opportunities in the future. That is wrong, because there's always opportunities in the market. If you miss out on this one, the next one comes in the next 5 minutes. In this case, FOMO can also indicate anger. You can get pissed off because you see other people making money from this opportunity while you don't. And this feeling violates your sense of control. I want you to look at the instances where you experience FOMO and try to write down specifically what's going through your mind and what are you feeling at that moment. When you map your emotional patterns like FOMO, greed, and doubt, you will realize that these patterns happen very frequently and consistently. And if you don't fix them, they will always come back to you and hold you back from trading success. When you are trading on a live account, you are dealing with an emotional higher power that has the ability to shut down your brain. Listen carefully. Your own emotions shut down the part of your brain that control your emotions, which is the tricky part, because it's easy to be rational and logical before you trade because you haven't experienced any emotions yet. But once you are put inside the trench, facing the enemies on the other side, trading your hard-earned money, you start to experience all these emotions and you won't be able to think clearly. To fix this, you need to look at the early warning signs when the emotions are still small. You have to be prepared by understanding your emotional patterns, understanding how to disrupt them, and learn how to catch it early. Because if you don't, your emotions will get a hold of you and you will just keep making the same mistakes over and over again. You will just keep losing money and blowing accounts after accounts. There will be absolutely no progress in your trading performance, which means you will never become a profitable trader. I have created the rational framework to help you map out your emotions, and I'm giving it to you for free. Link in the description. Use the rational framework to map your emotional patterns and also to record down your trades. So now I'm going to show you how to use the rational framework. And so if you go to the link in the description to download the rational framework, right, you'll be directed to this website where you have to fill in your email. After you have filled in your email, you submit it. This rational framework template will be sent to your email. So you need to open your email and check it out. Now basically, when you come onto this rational framework website, you'll see that the rational framework, emotions are not evil, they're signals to use and learn from. Get curious about what they are trying to tell you. So they're just like a little reminder for you. And then over here, this is the whole purpose of the rational framework. Use the rational framework to map your emotional patterns and record your trades. And basically, whenever you want to map out your emotions, just press this add a framework, and then you can write down maybe the date, like okay, it's 19th June. And then you can see this is all the things that you need to fill in so they can really map out your emotions. I have done like a little example for you, which you can see right here. So let's just go through the example real quick. So the first thing you have to fill in is the triggers. What compelled or triggered you to get into the trade? Maybe it could be you saw your confluence, your favorite confluence, Morningstar formed at this key level, price reversed at this key level. Whatever it is, fill that in. Next, put down the thoughts. What are you thinking about before you entered the trade? This is basically like your thought process, right? Like what is your mind telling you before you enter the trade? Example, but your mind could be telling you, oh, price is reversing right now. I better get in as soon as possible before missing out on this trade. Next one is like the whole point of this entire framework, emotions, right? How do you feel before and after taking the trade? Do you feel angry or scared or fear of missing out? Whatever emotion that you are feeling, write that down, okay? Write down the emotion that you feel before and also write down the emotion that you feel after taking a trade. Example, maybe you could have been having a bad day, right? Maybe you just broke up with your girlfriend. Bad day, then you could write, oh, I'm sad today. And perhaps that's not the best environment to trade in, but you still decide to go on to trade and they end up with a loss. Oh my god, I see a huge candlestick right now. I have to get in right now. Fear of missing out, put that in. So, or maybe another thing is, I want to get back at the market for causing me to lose a few trades in a row for the past few days. Past few days, I've been going through a losing streak and now I want to revenge trade so that I can get back the money that I lost. So that can be another example of an emotion. Next, put down your behavior. What do you do with your position? Do you scale in or do you scale out? Whatever that you do with your open position, write it down. Example, I'm hyper-focused on one position, so I did not scale in even though I saw opportunities to scale in. So that could be a mistake, right? Because in trading, you want to add on to your winner. So if you're winning big and you see opportunities to scale in, to add on, by all means go ahead and scale in. Next, actions. What are you doing when you are inside the trade? Are you constantly checking your profit and loss? So example, I'm constantly staring at the charts and looking at my profit and loss. I can't even stand up to go to the toilet, right? This is bad, guys. Please don't ever be just mindlessly looking at the charts. Next, changes to your decision making. Did your initial decision change? Do you move your stop loss and take profit unnecessarily? So example is I'm focused on revenge trading and getting my money back. Next, changes in market perception. Are you viewing the market for what it is, or are you imposing your thoughts onto the market? So maybe you could be thinking the market should go up now. I think that I can predict where the market is gonna go. Last but not least, come down to these trading mistakes and be honest with yourself, right? No one will be looking at this journal, this framework. Just be honest with yourself and jot down any and every single trading mistakes that you committed. Example could be revenge trading, forcing trades when there is no opportunities, getting out of a good trade. So yeah, I've written down my few examples: revenge trading, being too close-minded and imposing my thoughts onto the market instead of being flexible and adjusting my position when I saw that this was not a valid reversal. And I also failed to look at the overall big picture because I did not do my top-down analysis. I was stuck in one time frame and I only focused on one time frame. So all of this could be trading mistakes that
you can review and learn from, so that in the future you do not commit these mistakes, right? So this entire framework will allow you to map out all your emotional patterns and really get a better understanding of your feelings when you are trading. So like I said, before you trade, go on to this place right here, add a new framework, type in the day, date, whatever, and type in to like kind of remind yourself that, okay, this is the trade I took. Maybe it could be a gold trade, right? And then hashtag number one gold trade. And then over here, there you can write down, okay, the triggers, the thoughts, the emotions, the behaviors, actions, changes, and trading mistakes, right? So use this framework to your advantage. I really took out my time and spent a few hours creating this entire rational framework so that you guys can really become a better trader and get a better understanding of your emotions. So yeah, just go download it, man.
Use the winning trading journal to record and journal down your trades. And then use the rational framework to monitor your emotions when you are trading. If you can just do this for 21 days straight, it will eventually become a good habit that will help you become a better trader. The second step is to identify the roots of your problem. You can't correct a problem you can't see. So to get to the real reason behind your problems, you need to dig deeper. You need to uncover the hidden flaws, biases, and wrong ideas, including errors in learning that are preventing you from progressing. And you can refer to the first step where you have mapped your pattern. Look at the rational framework to identify the signals that a problem has been triggered. Recognize that a problem has been triggered so you can actually correct it. So if you want to identify the roots of your problem, follow these 4 steps. Describe the problem in detail. Explain why do you have this problem. Explain why the logic in step 2 is flawed. Come up with a correction to that flawed logic. Most traders can get consistent profit on a demo account, but struggle to do so in a live account. On a demo account, they feel calm and relaxed and can execute the trades with precision. On a live account, they feel uncertain, hesitant, and they start overthinking. This didn't exist when they trade on a demo account because the results don't actually matter. Losing and winning on a demo account doesn't really have an impact on your life at all, so emotions are rarely involved. The basketball player who can shoot all the free throws in practice but end up missing the free throws in NBA. The new actor who is able to speak clearly during rehearsals but starts stuttering and can't deliver on stage. The music artist who can sing beautifully in the studio but forgets her lyrics on stage. Just like the basketball player, the actor, and the music artist, if you believe that demo and a live account is the same, there's a fundamental flaw in your concept. The flaw here is not that you will feel some emotions on a live account. The flaw here is expecting your body to trade live without emotions, which is simply impossible. Most traders believe that there's a quick fix to correcting their emotional problems with greed, fear, anger, confidence, and discipline. Just like how you can't become a profitable trader overnight, you need to go through a learning process to eliminate a mental problem. Think for a moment about the quality of the trades that you have taken over the last 6 to 12 months. There are times where your decisions are spot on and you win every single trade. There are times where every trade you take leads to a loss. Aiming for perfection in trading is like aiming at a moving target because there are so many variables that can impact your trading performance, like whether or not you had enough sleep, you ate right, exercise, or you felt physically healthy and emotionally stable before you trade. Now, add these variables on top of how complex and unpredictable the market is. Now, the key here is to focus on reducing your variations in your trading performance. Treat yourself as an athlete. Do you want to become the LeBron James or Tiger Woods in trading? That means you have to make sacrifices. That means everything in your life have to revolve around trading. That means you need to have enough sleep, eat a healthy diet, and exercise so that you can optimize your body and your mind so you can perform your best when you trade. The third step is to correct your problem. Instead of focusing on growing your account, focus on correcting your current greatest weaknesses consistently. If you want to improve as a trader so you can make more money from trading, you must commit to eliminating these weaknesses or problems. These weaknesses have the power to hold you back, and if you don't work on them consistently, you will never become profitable at trading. This is part of your growth on the journey to become a profitable trader. So you must do this. This step is where you attack the problem by doing the correction. Here's where you learn how to stop your reactions in real time and minimize your mistakes. Firstly, you need to understand that when your emotions are high, logic is low. Correcting your reaction is a combination of having the correct logic and ensuring the logic is so clearly defined in your mind that it's strong enough to stop its patterns in its tracks. So after you have identified the pattern, you want to disrupt its momentum, because if you don't, the trade is going to become a loss and you will get the same results as you always do. So as soon as you recognize that your pattern has been triggered, take a deep breath or stand up and go take a walk or even talk to your friends. Next, you want to inject logic to drown out your emotions. You can do this by talking to yourself and coming up with logical sentences about the emotions. Here's a few examples. If you are lacking confidence, tell yourself, I spent thousands of hours on this plan. Am I really gonna let this one trade change it? If you are scared to fail, tell yourself, sometimes the risk from staying on the sidelines is the greater risk. If you are losing focus, tell yourself, trading is a business, so I have to run it like a serious business that demands my best. When the session is over, I can focus on other things. Not now. I know this sounds stupid as hell, but trust me, this will work. The whole concept here is to increase your logic when your emotions are high, so that your logic can overpower your emotions and you can actually think clearly with your head. Create specific and achievable weekly goals with daily benchmarks to measure progress. This will allow you to focus on sucking less rather than making money. Focus on the process and execution instead of the P&L. In this way, you will be able to tolerate the ups and downs of trading much better and also enjoy trading more because you are focusing on what you can control. So now rinse and repeat this whole system. What's the result of this three-part system? The result is when you trade, you will realize that you are more calm and you have a peace of mind. You are not trying to control your emotions or letting your emotions control you. Instead, you are aware of your emotions and you have came to a resolution with it. Imagine not having fear, greed, doubt, or confidence or discipline problems at all. That alone is worth the hard work to get there. And if you use this three-step system, you will get there. Throughout your entire life, you have been conditioned that mistakes and losses are bad. When you go to school, you get looked down upon because you have shit grades. When you go to work, your boss scolds you for making careless mistakes. So naturally, we feel that mistakes are bad, losses are bad. But what if I tell you that losses are not bad? Pretend you are a gambler for a minute. Let's say you are playing a roulette right now. If it lands on red 6 times in a row, will you expect the next one to be black? Or let's say you are rolling a dice. If you roll a dice and it doesn't generate a winning number, will you be angry? Now, this is what we call the gambler's fallacy or the Monte Carlo fallacy. This fallacy occurs when you believe that a certain random event is more likely or less likely to happen based on the outcome of the previous event or a series of events. In trading, anything can happen at any point of time. You must accept the fact that the market can do anything, anytime. Trading is not about predicting the future because that cannot be done. Once you can accept this fact, it is much easier to take losses without taking a hit to your self-esteem, which means you won't feel like a shitty trader when you enter a losing streak. Because for each trade that you take, you expect a random outcome. You know that a single trade is unique and has no memory. No matter how confident you are, the chances of you winning that trade is still 50%. Expect there to be losses 50% of the time. Embrace the fact that losses and wins are inevitable to any trading strategy. If you can't learn to accept small losses, sooner or later you will take big losses. What separates successful traders from unsuccessful traders is the ability to accept trading unpredictability in the short term, but equally have faith in the law of large numbers in the long term. When you truly accept the fact that trading is simply a probability game, concepts like win or lose, right or wrong will no longer matter. Now, how do you achieve peak performance when you are trading? Just like an athlete, it takes thousands of hours of practice and training to become the best trader possible. We have to develop the skill to make good risk and reward decisions. And to do that, I have 3 steps for you. Plan the trade, trade the plan, review and adjust the plan. Plan the trade. If you fail to plan, you plan to fail, which is why you must have a solid trading plan so that you can be consistent in your decision making. So you know what are the trades that you should take and what are the trades that you should avoid. A trading plan should explain where to enter and exit the trade, how to manage the trade once you are inside one, and what is your correct position size that you should be using. A trading plan must be structured to minimize losses when you are wrong and maximize profits when you are correct about a trade. A trading plan will help to redirect your decision-making process from your emotions and prevent you from making mistakes based on your emotions. Trade the plan is about taking the trading plan that you have created and following it religiously. Your plan is useless unless you execute it. Fear comes from uncertainty, fear of losing, fear of failure, fear of making mistakes. If you have a trading plan that is proven to work, it will remove some of that uncertainty. Do the right thing at the right time. This means following your trading plan, executing trades based on your trading plan, knowing when to get in and get out, and how you're going to manage risks and losses. Review and adjust the plan. Professional athletes are always reviewing their past performance and thinking about ways they can do better next time. We are the same. We need to review our trades and look for the small improvement that we can make so that we can potentially become better and actually test out this improvement. 90% of your losses occur because you do not follow your trading plan. You keep moving your stop loss because you are afraid to be wrong, so you'd rather be right than to make money. You over leverage and use a lot size way too big for your account because you are greedy. A lot of these trading psychology issues can really be fixed if you just follow your trading plan, and we only realize this after the trading day has ended, after we have already committed the mistakes that lead to the losses. If you are doing the right thing all the time, taking the trades that are aligned with your trading plan, then you have nothing to worry about. If you focus on trading your system with unwavering discipline and focus, the profits will eventually come. Focus on your process and not short-term results. One trade can have a random outcome, but 100 trades can be used as a filter to profit from your edge. If trading is a video game, I have literally gave you the cheat codes to win. And if you want to participate in the giveaway of 200k funded accounts, you need to watch all 4 videos of Roadmap to Mastery series from the start till the end, and also follow me on all my social media accounts, link in the description. And also go on to my Instagram at The Trading Geek and tag 3 friends on the most recent post. I will randomly pick 2 lucky winners to win these 100k funded accounts, and I will announce the results soon on my Instagram at Guangyi or at The Trading Geek, right? So make sure you follow me on there. This is the final episode of Roadmap to Mastery series, and I hope that you have learned and enjoyed every single episode. Now, watching once is not enough to fully grasp and understand the concepts being shared in these videos. You have been conditioned to be a losing trader for so long, and to rewire your brain and reprogram your subconscious mind for success, you need to go and rewatch the 4 episodes from Roadmap to Mastery series again, and this time take action. I hope that you'll rewatch this series again and again and utilize it as a tool to trigger yourself to find the answers that are already lying inside you. You don't have to believe and use everything within this series. Grab a hold of the things that you think are useful and put them into action immediately. You won't have to implement all of the strategies or use all of the tools in the series to make some major changes. All 4 videos have life-changing potential individually. However, if you use all these 4 videos, you will be able to create, live, and enjoy the life you have always been dreaming of. How are you going to live the next 5 years of your life? Because 5 years from now, you will surely arrive at your destination. The question is, where would you have arrived and who would you have become? Now is the perfect time to design the next 5 years of your life. Stop waiting. Check out all the resources that I have, link in the description, that will help you become a profitable trader. And as always, remember, you're just one trade away. Mwah.